I had AJ join us. I don't know if you guys have actually met, but
We have not.
so AJ, Mark AJ.
Hey,
Hey,
nice
AJ.
to. I was actually in one of your trainings several years back that
Oh, I
that
can.
DB hosted. Yeah.
Yeah, no. I think I recognize the voice.
Well, so guys, I just kind of wanted to get the two of you together, I guess all three of us together, and take a look at what AJ's done for the NT8 build. Really, Mark, we just took it and started from scratch, just a full ground up rebuild, and tried to take some of the elements that we've had a lot of success with in MotiveWave, some things like pre-configuring the profiles to have some options, just a lot of the niceties, making some menus more functional, things like that, and then of course adding on AlgoX and then some other tools that AJ's come up with, and I know you've been sort of juggling between computers and everything else, so you probably haven't had a lot of time to dig through this, but I thought it would be. It's difficult when you're trying to explain new features, and features are one thing, but you and I always talk about benefits, right? It's one thing to have a bunch of stuff, but you kind of have to figure out what that stuff does and whether or not it provides you an edge or has the potential to provide you an edge, and how you might utilize it. Because I find that most traders these days for the last however many years I've been doing this, are more focused on sort of the accumulation of stuff.
Yeah.
Doesn't necessarily mean that they're going to find any success with it. So people will write us support tickets, and say, well, do you have this, this, and this? And it's like, well, I don't know. I don't even know what this, and this is. Does it actually do anything for you? And so I hate to bog people down with extra stuff without sort of being able to explain how it might be used. And so I thought that given you've done so much training with OFA and you have so many students that have gone through your courses through the years, that getting some kind of three-way explanation of how things might be used, and just some off-the-cuff discussion might be really good for people who are looking at some of these new features.
Great.
I'm not real sure. Did you ever sort of dig into the AlgoX stuff? I know you struggled using MotiveWave, and so it probably wasn't a very good fit for you.
Yeah, no, I've played around with AlgoX early on when it first came out. Yep.
Well, I think the biggest piece of it, at least for me, what impacted my trading the most was the idea that I was sort of I was presetting a lot of things that I know I needed to do, whether that's moving my stop along with a value area or with a point of control, or entering off of a point of control, instead of sort of trying to, oh, maybe I'm not going to get filled, so I'm going to move this order up, and then inadvertently creating a risk problem, right?
Yep, absolutely.
Where you start feeling that anxiety of maybe not getting in a trade, or wanting to move your stop out one more tick, and you stop thinking about the reason that you're taking the trade and the things that have to come together for it to work. And what I found was immediately my not only my P&L, but just my overall capacity to trade well was drastically improved by sort of automating the concept of how much I'm going to risk and where I'm going to trade. I mean, if we do, I was going through your original volume profile course that you did for us years ago, and I was going through that, and what I was sort of taken by the you can lay down all this logic where you say, this is what a profile is, and this is what it means, and this is where you should be looking for things, and whether it's high volume nodes or low volume nodes, or value areas, or pieces thereof. And so you can build this concept around all of that for how you want to trade. But if you don't then go and put your orders exactly where you're talking about, it really doesn't matter. You sort of take all that work and throw it away, and go back to the hope.
Yeah, and the other thing that I've found with traders, a lot of traders, is you get the head knowledge, but that emotional IQ to be able to pull the trigger. So price is coming into an area, you're getting the response from the market that you want to. You're getting ready for a trade, and you can't pull the trigger. and then you get into, well, it's starting to go, and now you're giving up a couple more ticks for your entry, and that's the other thing that AlgoX, at least that I found, was really beneficial for is you have a trade, you've done the work, the market is telling you one thing. Now, don't kill your trade because of your lack of emotional IQ in trading, because of what you think might happen. Let the trade work. Let it get in where it tells you to get in, where your system tells you to get in, and let it run.
Well, I think that's obviously one big piece of it. The other piece that's helped me tremendously was learning that if I'm on this trade, I can use a 7-tick stop because that's where the barriers of volume tell me that it makes sense. On the next trade, it may only be a 3-tick stop, or it may be much larger than that, in which case I don't need to be taking the trade.
That's
and
exactly
so to sort of have everything working for you in those risk parameters. And risk is so boring to talk about. Traders don't want to talk about, or I should say, people who want to be traders, they don't want to talk about it. They just want to be shown an entry or something like that. But so it's always been a hard concept to sell to somebody in the importance of it, because they always look at it and say, well, if I could ever learn how to trade it, then maybe I'll sit down and worry about risk, which is ridiculous. That's sort of like saying I'm going to open up a restaurant, but I have no business plan and I'm not a chef.
Yeah, exactly.
So it's always been it's always been hard to have those discussions with people who are in the phase of their trading where they need it the most. And so I love sort of automating it and taking all those pieces out and really making it work well.
Yeah, and I for me, volume says a lot. It's not the end all be all, but it gives you consistent feedback in terms of what market participants are trying to do. So using the volume tools that you've incorporated and the algorithms that you've incorporated, and the way that you look at, the way that you compare volume to be able to show which side is trying to move, which side is holding. Just to be able to tell that story is, to me, it's the only way to trade in this kind of closed electronic market.
Sure. Well, I think we have by this point in time, even though AlgoX is new to NT8, it's really not new to OFA. And so I know we have a lot of training material and a lot of videos and stuff on that. So I thought maybe we would spend some time talking with AJ. AJ put together this package of what we call the Delta add-on, and it's sort of this pack of features that goes really beyond just the basic concept of Delta, whether it's cumulative, and then there's a lot of different ways to look at it. And I thought, over the years, I have that has been a piece that I've tried to move away from more than anything else. And it's funny because sent out an email a couple of days ago letting people know that if you were an existing customer, we wanted to give you a way to upgrade and not have to pay the full price and all of that kind of stuff. And I got these emails back immediately that were like, well, you've been saying for years that you don't like Delta. So what are you doing building a Delta tool? And I, rightfully so.
Yeah.
And so, my response to them, and I guess to everyone, is that, one, it's something that we probably get 50 requests a week for people who want deeper tools that are analyzing the difference between the bid and the ask.
Yeah.
So it's something that obviously people want, and then sort of beyond that is that this is a tool set that AJ really built on his own prior to being engaged by OFA to rebuild for NT8. And he's been an OFA student for a long time. So it's not really my place to say what's right and what's wrong or anything else. You just know when you're trading and you're trading a certain way and you like the what you're looking at.
Mm-hmm.
But that doesn't, I don't ever want to discount for what it is, but it also puts me in a precarious situation where I'm not really the best one to explain some of these things. So I thought maybe we would, we'd let, AJ kind of walk us through some of the features and really what those benefits are. And then I'm curious to know your thoughts on it, Mark, because you sort of know where you know where my trading is, and I know where your trading is, and it's always finding that, well, maybe there is something golden in that nugget. So
yeah, absolutely.
So AJ, tell us a little bit about where all these ideas came from, and tell me where you start. And
well, as you know, I'd been working on this probably about a year prior to engaging with you. And as you said, I was a student and a customer of OFA. With some of the earlier challenges, as we all know, of developing for Ninja 8, I was, very determined in actually building this myself, not quite clear what the other vendors were going to be doing. And it was through that, and actually in conjunction with a course I paid a handsome fee, but actually for me, I felt it was very valuable. But through that training and being in the room and listening to an institutional trader, it was his teachings and context of using Delta, cumulative Delta, that it really enlightened how it should be used properly and in context. So from that, it kind of propelled me to really to develop not only the Delta tools, but also some of the additional features that you'll see where we've got bid-ask analysis, both at price and at the volume diagonal, which OFA pioneered, as you know, and clarified and corrected that use of bid-ask at the diagonal versus a horizontal. So in addition to the cumulative delta, back to what Mark was saying, I felt giving you that confidence to press the button when you've got that market order aggressive orders coming into the market, it really, with the circles, as you can turn on in a minute, it really brought to light, not only with the structure, because to me, market structure and price action in conjunction with the volume is very important. So not only have the profiles, one of the aspects I feel is very important to me is a structure, particularly with a market like the ES. It's a very structure-based market. Added with the volume at the diagonal or at the ask, it really highlighted when you've got algo activity, institutional activity coming in to lean on. It gave you that something to lean on to actually enter a trade or wait for a retest. So that it's some of the background as to, for myself, for my own trading, where I was hesitating, it just gave me that little bit of an edge and color and context to the chart that I wasn't seeing in any other product.
And that's the cumulative delta?
That's the cumulative, and also, DB, I don't know if can you enable the from the menu under the volume?
Yeah, absolutely. And I wanted to bring one thing up because we've had a lot of people write to us and say, well, I can't believe now you're adding the net and the COT back and you're making me pay for it. And I want to be clear that whether you have the Delta package or not, for NT8 we've built back in the COT information that was here before. So that's not what we're talking about here, but it's obviously a part of it. So I thought maybe I'll clean up the chart a little bit. And what do you want me to enable, I guess, is the best. Because right now I have the Delta histogram on, so that's obviously part of it. But you tell me what you want to see and I'll put it up.
To start with, if you go to the diagonal imbalance, which is the second set, that one, yeah. So if you adjust the actual filter size itself, now for the ES, if you move it up to, let's say 600. Okay. And then if you drop down to the filter size, for the print mode, typically 1 or 2 is sufficient because it's ratioed to the actual bar size. If you actually set it, okay. Now if you enable that, okay. So in fact, if you go back and set it to 1, that probably is a better size.
So what is that one right there, the min diag imbalance filter?
Okay, so what that's saying, Mark, is magenta is on the bid side. What that's saying is, based on the value in the slider, it's highlighting where the difference between the bid and ask is greater than
600
the setting. So what it does is dynamically, for the bars that are in view on the chart, it enables you to give you some visual impression of where some heavy orders are coming in at the ask or at the bid. it's actually very useful to also see in a structure chart. So, because obviously you can get significantly more bars in a structure chart. So if you expand that, change the circle size to, let's say, 4 or 5. There you go.
It just gives you a way, that piece of it really just gives you a way to visualize it a little bit
Yes,
better, I guess.
exactly.
I'm gonna pull this profile off so we don't end up with too many things that we're looking at here, and we can probably go back into the morning. We're so late in the day.
So there you're seeing, just for that setting, which you can dynamically change without having to reload your parameters. That's the beauty of it. Every day it has different liquidity, volume, so you can adjust that value to bring the number of circles that you wish to see to gauge some activity. So in the example that you have there, DB, you'll notice that the yellow circle being at the ask, basically the ask is significantly higher than the bid. At that high there, it's indicative of if you go left, the one below.
Down this one.
That one, yes. So you're seeing there, you've got some absorption there at the ask. It doesn't get through, particularly with a market like ES. You've got a lot of order book activity. So again, as I've emphasized in documentation, and as you do in your training, you've always got to consider who's on the other side of that.
Mm-hmm.
Sure.
So you can see there, you've got all the absorption on the book. They've obviously either got to rebalance their inventory. It falls back down.
Mm-hmm.
And
even
you see
retest.
Retest, exactly. It falls down to the lows, and then again at the bottom there, you could either the magenta one, which is just below your cursor. So again, you've got heavier selling at the bid. Clearly, so that you've got an imbalance there to the ask at that price level, and then the market comes up. So again, it's highlighting you've got trapped volume down there. So one of the things that I look at in trading is, I mean, to me, trading is a game of trap the trader, essentially. And this is one of the things that I feel that the volume analysis with the circles at price or at the diagonal, it really brings it to light, and it helps you to always consider on the other side, if you're using, say, something like Bookmap or you're watching the depth, you've always got to consider the limit side. And obviously markets are actual market orders. You can't pull market orders. It's actual real volume, but it almost gives you a little bit of an insight into the other side of the market.
Yeah. Well, I like it, Mark, from my perspective. And one of the things that you really helped me get my head around when I was, but part of my frustration comes in trying to explain reading the print to people, and there's this immediate assumption that, well, if it's a market order and it came in at the ask, well, that means that there were buyers buying into it, and that's so short-sighted. Well, they have to be buying into something, right? So if there's this heavy market depth there, well, how do you tell that there's a heavy market depth? Well, one, you're watching it, but two, if you've got a huge imbalance at one side or the other, obviously there's an impact point. It's not, I mean, certainly in the case of maybe a report or something where the market's just completely lapse of any buyer or seller, that's different. But when you've got a large impact point and it holds, so you've got buyers buying into it, obviously they're buying into somebody's inventory and the depth, and the market holds and turns. Well, not only does that provide you with the context of what happened here, particularly on a retest, I love that type of stuff, but it's also, well, at what point is this threshold broken? Right. So we have 15 minutes later, the buyers are coming back up and testing into it, and then there's here is the switch. That inventory now has to blow the other direction.
It's crystal clear.
Yeah, it really, I love that type of stuff, particularly when you're able to isolate a few points on the chart rather than millions.
Yeah, no, that's really good. It's really good. And the visual, being able to read the story as the market develops, and being able to continually to have that in front of you so that you can be more objective. And reading the print is one thing, but reading the print at the right area is maybe appropriate, but just reading the print for reading the print doesn't mean anything. But to be able to have this to be able to kind of highlight specific areas is great. I love that.
I like this. You can see this threshold that was held, right?
Yep.
It's the heavy print. It's the sellers. Well, why didn't the sellers trade all the way through? Well, there was more depth there, and they held them. And then they tried again and again. And where do they hold? Right at the decision point. I love it. This is great stuff.
This is really good. I'm all for these kind of visuals.
So I did actually, it was earlier, I'm working on a separate video focusing on these features. I've covered gold, ZB, oil, 6C, and ES, just so that some of the customers can see the variance, because each market obviously has its own characteristics on.
Sure. So I have crude up too. Let's put something on here and get these profiles off.
Funny enough, these decision point style profiles at the pivots DB, which I've come to learn and use a bit more, I've been looking at that, and certainly with these volume circles, it really brings some clarity to those areas.
Oh, good.
So what you want to do is increase the size of the actual circle to about a 4 or a 5.
Okay.
And then adjust the filter, because you've got quite a number of circles there. So you want to probably have less circles appearing, which are then, so you just want to kind of tweak it, maybe tweak it down a little. Okay, let's go with that.
Okay.
So can I ask quick, are you finding different settings more appropriate in the different instruments?
Yes, that's something I'm covering in the tutorial, is that obviously for thinner markets like gold versus ES, and then you've got kind of CL in the middle, the actual settings of the controls are, you can adjust the actual maximum.
Yeah.
What that does is it makes it more sensitive to a smaller range of, say, perhaps 300, whereas ES would maybe have 1500, 2000 in that range. You can define and tune these to each contract.
Yeah, and that really goes back to, I mean, the other part of that for a trader is do the work and really understand what kind of volume is normal, what kind of volume is not normal for the given instrument. Because if you don't know that, then you're hunting and pecking and just trying things out relative to the different settings, which you should be doing anyway. But you really should know what is kind of average normal volume for the instruments to be able to, in my opinion, to use this effectively.
Yes, and that's something that a user can obviously start off in the print mode just to kind of get a gauge for the day, and then based on that, they can adjust. But I think one of the things is that the dynamic nature of this with the sliders is that it gives them that ability just to get a very quick assessment. But I agree absolutely, it's for whichever market they're skilled or proficient at, they should certainly be familiar with the volume parameters for that.
Yeah, I would just add that in the training. It's always good fundamentals.
Now, AJ, am I seeing this the right way? We've got, some of these are different sizes. So some of the circles are, if I'm not mistaken, we've got a smaller yellow circle here versus a larger one. Is there a? Okay.
So what's happening here is the scaling is for the bars that are in view. Perhaps actually, if you switch off the AlgoX panel and then just scroll the bars so you get a little more bars in view. So what it's also doing is, you can see on the bottom left there, you've got a fairly large magenta, which is on the bid side, relative to some of these yellow circles. So what you're actually doing is, what it's actually doing is dynamically giving you a relative comparison of the difference in the diagonal. That setting, the setting on the slider, what that is it defines a minimum in order to have a circle. But the OFA software is continually monitoring. what is the largest value I currently have in view? And based on that, it's scaling the other circles.
Okay, so I love that because particularly times of day can be very, very tricky for people. So if you've got, if you have a bunch of relative activity that happens, say an hour before the bell, and then volume changes, and we have a tremendous amount of volume at the equity opens, the scale of that's going to be quite different just from being in view of two different areas that might have imbalances, but obviously with 8 or 10 times the volume after the opening bell.
Absolutely.
And it's going to be quite different.
It immediately gives you that feedback where you should be where actually you want to be looking at the price action. As you know, for a lot of traders who have been used to several indicators in lower panels, if you're having to look at volume in addition to it takes your eyes away from the price action. So if you have that information at the price action, price bar level, it keeps your focus.
Mm-hmm.
Okay, what's next?
Okay, so that covers the diagonal. Do you want to have a quick look at the horizontal one?
Let me ask you, just how would you interpret, if you look over to the right side there, how do you interpret that cluster?
This mess here?
Yeah.
Okay, so what I'm seeing here is a smaller one at the ask, and you've kind of got a bit of what I would call a bit of a fight zone.
Yeah.
I lost audio. A fight, yeah, a battle.
A fight zone, yeah. I would typically class that as you've got a push and pull, tug of war going on here, and who wins the battle.
Mm-hmm.
And again, typically you'll often see that the market will come back to retest that, particularly if it's a significant volume area.
Which it looks like it's doing right now.
Yeah, and then obviously it did, and it broke through. I mean, here is your push up, and you can see the effort at the ask here to get through it, push through, retest, and go. There's a nice break.
Which I think by your chart there, what that really is highlighting, that's essentially the oil close at 7.
Mm-hmm.
It's
yeah, yep.
What you typically
exactly
expect.
What it is.
Yes.
Yeah. Interesting.
So just as a comparison, DB, if you switch off if you disable the diagonal, you just hide that.
Okay.
Okay. Now
do you want me to go back to the ES or stay on CL?
Stay on CL.
Okay.
Okay. Now go to the one above, which is the horizontal one. It's the section above. Okay.
This one.
So yeah. So what we're seeing now here is this is the volume at the bid or the ask. So say you particularly want to filter for large specific prints greater than a certain value, this is a circle section to use. So again, you would adjust that value to a higher value, and just observe as you do that. Adjust the circle filter size as well. It's just below, that's it. Okay, probably to about, that's fine. So again, there we can see.
Oh, I'm on the wrong one, sorry.
So
the higher up I'm going, the less circles I should see.
Exactly. So what it's filtering out is, yeah,
okay,
specifically higher prints, and that's at the horizontal volume at price level. So for that type of analysis, again, you're seeing there's a lot of buyers at the top there on the left. That's again another form of, you could say, trap buyers at that point. And so again, you've got that information to lean on, and as Mark's saying, that word adding to the story of your read of the market. So it's given two different ways of filtering the volume, either the imbalance or at the specific prints at the bid or the ask.
Gotcha.
So that covers those two. The next section, actually, if you go to the ES, because this is the one that probably better, and if you open up into print mode, okay, the circles are switched off. Okay, in this one,
I think we just don't have any on.
Oh, there you go. So you just just above. You just you can leave them on. It's fine.
Oh, okay.
You can leave them on. But see where it's the unfinished option markers?
I don't see that. Oh.
Yep, right here.
Oh, yeah, okay.
Okay. So what I did was to add this feature. I mean, incidentally, Mark, I actually remember this was something that you touched on in your course.
Oh, yeah.
It always comes back to haunt you, doesn't it, Mark?
Well, yeah.
So for a market like the ES, it's the unfinished business. I agree the dynamics of the market have shifted. I do see some days where the unfinished business is respected, and other days it's just too fast and the momentum doesn't come back. So so I take his point there.
Sure. Well, and I mean that's there are a lot of things that come across my desk that I look at and go, I can't believe that somebody is making that claim, and it's only because of the way I'm looking at things too. So I think there's always the potential to have a strategy around something. I've felt that there is there's a reality there that if the market is pushing in a direction and we're able to trade through on the way down through the best bid in order to start picking up traffic at the ask, that it's almost unrealistic that the market isn't going to come back to it. But as Mark said, I think that that's changed quite a bit too, and I think most of that has a huge effect on that is the way that orders come into the market now. It's very, very different than even 3 or 4 years ago, which is why I really started changing the way that OFA was identifying points in the market, because when you start using synthetic orders or you're dropping orders in as fast as they're coming out, which is what most of the algos are doing because they're just looking for ticks here and there, then it really changes that structure, the microstructure that's there when you're looking at things trading through. So yeah, I guess I can see both sides of it. I thought maybe what I would do is turn off the circles and look at this on a structure chart. So really, these are the little dots here. That's what you're.
That's correct. Yeah. For yes. Yeah. So you can see some are respected, and in the market it comes back. In fact, all the way up there, it all finishes, and even that one at the top, and it comes back and tests. So there are. I certainly have noticed a number of instances of days where it kind of gives you that, if rather than seeing that as a decision point, that to either wait for the retest or a retest of the high, that often that can come in. I guess also the information could be used, for a thicker market like ES, if the unfinished business is not being retested, as it is obviously indicative of a much stronger momentum in the market, and you can use that information too.
Yeah, and I also think that there's probably some relationship between when you have a tremendous imbalance in the volume as well. Yes. So, some of these points, like, it's really something that Mark taught me, which is when you have these massive battleground spots that are eventually broken through. So for example, if we have a high here that was a tremendous amount of volume exchanged hands, meaning the buyers really wanted to carry it up and the sellers really didn't want it to happen, and they ended up winning. Well, that's one side of it that's in the past, but it's really more about what happens the next time you're there. And yes, if the buyers get on the other side of it, their ability to carry it out. And so I think there's probably a good combination of things.
Absolutely. I think combining that with either the diagonal circles or the horizontal ones with the markers, I'm sure there's some patterns there that could be determined.
Okay, well, Mark jumped off. He's going to try to reboot. I know he's having some computer issues, and that's just part of it. So yeah, we'll just sort of continue moving along.
So the other feature at the bottom of that is the exhaustion. That's at the bottom of the section.
Oh, the auto exhaustion. Yeah.
Exhaustion, which is it's not a full migration of the mapping that was in Ninja 7, but it's kind of an auto algorithm that's been applied to the highs and the lows, just to give you some indication of some exhaustion at turns at various levels. So
sure, I've always found that it's hard to make sense of that unless you're really looking at the print.
Yeah, the print, yes.
I think that people can get overwhelmed with a lot of things going on, and to me, the relevance of looking at the market exhaust to one side or the other was always when I'm in a trade or about to get into a trade, when I'm making that decision and seeing something come up that indicates, oh, maybe this isn't going where I think it's going.
Yeah.
Because it's so instant, but then it doesn't have a long-term effect like some people would like for it to do. So when I would look at people who would show me these charts and, 12 hours ago it exhausted here, and then, 5 hours later that didn't hold. Well, it's more about in that very second. So
yeah, I mean, my reading it was it kind of complements the sequence dots, the actual on the momentum side. But really, what I do see is there are areas where it does exhaust, but other than that, it's kind of like a pause in the market at that time.
Yes, yeah, and again, it's something that can easily develop into something else, or it could keep you out of trouble.
Yes.
But it's really it's a real time indicator. It's not meant to give you some insight into what's happened in history, and that's. I think that's always a struggle, because people want to put something on a chart and they want to go back and look at it and say, well, the lines crossed over here and that one worked, but then they crossed over here and that one didn't, and they crossed over here and that one didn't, and they're sort of going back and making a tally of good versus bad, instead of putting it in the context of, well, if I'm in a trade, is this going to provide benefit, or in a setup, I guess, more than even just in a trade.
Yeah.
So on top of that, we've got obviously just the delta histogram at the bottom, right?
We have that, yes. And if you want, you can add the cumulative delta.
Okay. Is that through adding another indicator?
Yes, through the indicator section.
Okay.
So if you scroll down to OFA, there you go.
Okay.
And if you just leave it the default settings.
Can you hear me?
Hey, Mark,
yes.
Welcome back.
Thank you. That's what I need. One more computer problem.
Okay, so this is the cumulative delta.
So a lot of people will be familiar with this. Some people are less familiar with it. Again, this has been part of my, some of my background in training to use this in context, looking for areas of divergence. I mean, cumulative delta. I mean, it typically it often is a confirmer of price action. But where it gets interesting is where you do get some divergence.
Well, like this as an example, where you've got a low and then a higher low in the price, but you have a low and a lower low in the cumulative delta. That's what you mean by a divergence, right?
That's an example. Yes, and also if you can scroll back a little bit more as well. So what you're seeing there is mostly confirming price action. So again, it's giving that confirmation that the bid-ask volume is confirming the price action.
So down below is just the delta for each bar?
It's a cumulative delta for the day. So
cumulative
it's
delta.
Yeah, it's a cumulative delta. Okay. So if you scrunch up the bars a little more. Okay. Right. So here's a good example. So you've got that bar, the pivot round about the 10-10 mark.
Mm-hmm.
Okay, so you've got price it's broken that previous swing high, but the delta is falling. So coming into the 1046 area,
okay,
you'll see you've got a net selling, although price is rising. So again,
I see. So you have price going up and the overall delta.
So the read there is okay. So you've got net selling, but you've got a lower high. So again, it's giving you an insight that you've got likely absorption there on the limit side or on the book side at that point, giving you again that confidence to take that trade.
So do me a favor. Can you create a volume profile? Where's the start of this move up? Where's the bottom of this swing?
So if you say 10-10, oh, you could go further back.
Yeah, can you scrunch that up a little bit, if you would, please?
Sure.
All right. Will you do me a favor, and from that 940 mark right there, the bottom of that swing, is there a way to draw a profile from that all the way to the end?
To the end of the chart? Or?
Yep, end of the swing. Yep.
Oh, end of the swing. Okay.
Swing high.
So you want it back here or up?
All the way over.
Okay.
I just wanted to see something. Yeah, see, I would. I am such a huge fan of CWAP and VWAP. I mean, huge fan of CWAP and VWAP, and I would see those two negative delta bars, and then once price started coming back up above CWAP there, I'd just be trading the snot out of that thing long, using CWAP as my entry.
Well, what is interesting that I've noted as well is that in a number of the instruments, you can get the divergence that actually occurs around the VWAP area, whether it's the real-time session VWAP. So, DB, if you were to actually enable the VWAP history line for that same swing that you did for Mark there.
Oh, okay.
So if you
let me get the swing back. Sorry,
Okay.
I'm playing around while you guys are talking.
Okay. Yeah. So if you bring in the VWAP history in the volume profile settings.
I just wanted to see how that CWAP, VWAP, and profile related to the.
So if you just enable the VWAP history line.
Cumulative delta.
That's it. Yeah. Okay. So I don't know if you know, Mark, but I've added one of the things I added to the profile was the actual VWAP history.
The history. Okay, that's great.
Yeah, so it's cumulative rather than just the horizontal bar.
Yeah, that's awesome.
Yeah. So,
I mean, look at that. I mean, this is stupid easy right here.
Yeah. So it's great. It gives you an interesting zone, and between the CWAP and the VWAP, and then
I'd be all over that CWAP and VWAP. I would use CWAP as my entry probably, and put my stop below VWAP, and I'd have been in this trade all afternoon, all morning and afternoon. I mean, this is like I said, stupid easy to me right here. Yeah. And that bar right there, the delta where it shows that move down. Once it tried to get through VWAP and couldn't and pop back up, that's go time for me.
Yeah, then you're right back in it.
Yeah,
I'm curious if we put the imbalance. It's really small. Let me make it bigger.
Yeah. So you can see there that's contributed to that push down into the VWAP CWAP zone. Again, it's just giving you that indication of some absorption that's going on there. But for traders who are familiar and use the VWAP CWAP, they wouldn't necessarily need the delta. But it just gives, for delta readers, it gives that extra confirmation that, hey, we've got some absorption here.
Yeah. Yep. Something happened at the market at that time, and the bottom kind of dropped out, and buyers just started coming back in. And then, I mean, this is this is pretty easy. It's really hard not to make money with this tool. I mean, you might have lost in a couple of those CWAP trades, long. I mean, maybe we've got a scale or so, but once that little activity happened around 10-10, right before that, it's pretty easy. Anyway, I just wanted to see how that overlaid with that.
Sure, no, it's a good contrast.
I mean, that is so clear to me that this market was moving up. CWAP had been a great trade for 2 times. If you would have taken it the first time, you would have been at least 1 scale, if not 2 scales out. So you would have gotten stopped, likely. And then once this thing crossed back over VWAP, use VWAP as your entry, and your risk is like 3 or 4 ticks.
Yeah.
All day long. Sorry, DB, I didn't mean to.
No, you're not. You're not. I love the discussion. So
Yeah.
this is the part that I like, Mark, because to me, when I can put a few pieces together, I just love to see it. So here we've got that situation where you've got activity coming in that should be representing a battle, right? We have the imbalance here at this point. Well, just from watching the price action, you've got the market moving up, and then there's a pullback into this. Is it going to transition back over, and where does that pullback happen? We're right at the prior high here, right?
Yeah.
So that's where this happens, and instead you get an acceleration point, right? So to me, that's always going to be one of the most important points on a chart is when we have that going on in the middle of a swing. You've got your VWAP holding right under the shelf of volume. And by the time you come back to the CWAP here, look at the confirmation that you have of where that VWAP falls.
I know.
I mean, you're right in the middle of this imbalance where the buyers came in and started pressing to hold it higher. That's your transition. There's a shelf of volume in the profile of that.
I know.
Yeah, I wouldn't have any doubt about taking that trade. And you're talking about something with a 79 to 77 tick stop.
I mean, the risk to reward on that trade, the risk to reward alone on that trade would tell you to get in. I mean, forget about probability of winning or not. The risk reward on that trade is good.
Well, I just love that this is sort of giving, because I think a lot of people struggle with this. Well, how do I know where to define those sort of those points where the market really has to hold? And to me, it's something that visually I've been able to do ever since I started trading. I don't know why I've got an ability to read the structure of the market, but when I see us pressing into a prior high, I know that that's where we're going to find some sort of a pullback. It's going to be what we call a decision point. It's either going to reverse and move back across, or they're going to regain momentum. So to have that outlined by the imbalance is sort of like saying, hey, if we get above this, you need to mark this off, and you need to know where that volume falls. And then you've got your VWAP falling right there as well, which should, for all intents and purposes, be the backstop to your trade.
Exactly.
So I love how that comes together. I was trying to see if I had any impact from the cumulative delta here, and I'm looking at it, and you can see where when we built into that, this is where the cumulative delta is. We pulled back, and we're still, even with the action down, we're still magnitudes higher than where that activity took place. So, and
I think what I've heard you say so far is this gives you confidence, right? And people need confidence, right? Because we all have psychology around trading, and nobody wants to lose. So you need confidence, and that delta certainly gives you the confidence that the market is trying to push up. The market is trying to go higher. And even with that little bit of the delta move back down, price certainly moved more than relatively to the delta. So again, everything in that trade there tells me go long, CWAP, let VWAP be the stop. You should be, even if you lose, to me, the risk reward on that trade is worth it. Because, traders, you talk about, what they know. They don't know anything. We don't know anything, right? We don't know what's going to happen in the next 5 seconds. All we can do is say, this is what it looks like is happening. Here's my risk. I want to take the best risk reward trade I can possibly take. That's a no-brainer.
I wanted to bring this up, Mark, because I don't know if this is something you've seen or not, that AJ did in this with this Delta add-on. You can also add fibs to your profiles. So let me get this little profile out of the way here. We can't see it. There we go. So on the larger profile, this is your basics, the fib retracements, right?
Yep.
And no, I've never been a big fib guy, but it's one of those things that, it's sort of hard to argue when a lot of different things are coming together, and you've got your fib retracement right where your VWAP, your CWAP, your VWAP back of the stop is, right?
Yep.
So there again, you've got more convergence. So here we have the imbalance of it. the CWAP from the swing, the VWAP from the swing, and
Those are
we also
fib
have
levels? They don't-
So
they
check
don't
this
look
out. Look,
They don't
when
look
you-
like fib levels to me.
well, when we go into the profile settings, you can go to fibs, and so I've got the
Oh,
382, the 50%, and the 618 on there, and obviously
Got
you
it.
can put in any of them that you wanted.
Yep.
But then when you have them on the chart,
Yeah, I see it now.
and you see, oh, okay, well, we have a swing up and it pulls back to the 382. Oh, well, it doesn't even pull back to it, but that's where my stop is obviously going to be behind that first.
Exactly.
I don't know.
Typically, the ones that I've found to be of interest are the 50, the 618, and the 70.5. And when you have confluence on these levels with your swing at whether it's the VWAP or CWAP or even the POC, again, it's amazing how often that the market, again, through this other training, how often it will retest the 50% mark, because there is some measured move in the institutional market that simply or not does use the 50% level in terms of assessing the next. And in addition to the standard fibs, we can add extensions. So you can add 50% or 100% of your actual swing to add to your risk reward profile. And so it was just to give that, given we have the power in OFA to draw these profiles, I thought it would be basically a useful enhancement to give users the option for those that use fibs to a degree to add that.
And looking at the delta there, I mean, to me, there is no reason not in this market here not to take that long. No reason at all. So if you're looking at that as a confidence builder, booster, whatever it might be, if somebody can't take that trade with that risk reward right there, then I don't know. I don't know what to say. Maybe hypnotism.
With different traders, you're needing that extra confirmation edge. It's with the Delta, it's just giving you that little extra insight, just as you said, that it's confirming the price action. There's no divergence. So
I totally agree with you, and I would hope that is the thing that would help people to, one more level of confluence, one more thing to say to take the trade, to actually click the button, and then using AlgoX, let the trade actually work. And you might get stopped out, like that move down. You might get stopped out on some weird news or some wild volume spike in the market at any given time. I mean, that's just the market, especially our market today. It happens. But all of this is telling a story about what the market is trying to do. And that's, from the day one I started training, it was all about that. Use what you can use that will give you an edge to help you understand what is the market trying to do. And if you can do that and determine, is it trying to go up, is it trying to go down, is it in balance, then you can use the tools and the different levels to find opportunities for trading areas and then take the trades.
Yes.
But the confluence thing gives somebody confidence. Then there's this big chasm between confluence and actually clicking the button and then letting the trade work. And honestly, that's where AlgoX really is a benefit. And I'm not trying to market the thing, but it takes away the human factor. And all of this, the deltas, everything that you've shown here is great at giving somebody additional information that can translate into confirmation and confidence to take the trade. And take the trade where the system is and the information is telling you to take the trade. Don't sit there and wait, well, is it going to go up? Okay, now it's going up. Oh, okay, now I'll take the trade. Because now, like you talked about earlier, DB, you start messing with your risk.
Sure. Well, okay. AJ, are there any other pieces to the puzzle you want to go over, or you think we've...
I think we've covered the cumulative delta. Just out of interest, Mark, do you use the bookmap product?
I do not.
Okay.
I do not. Since this market has changed, around March, I have not March, but January, when things really started taking off, I've I've changed my trading a little bit. I'm looking at the swings. I'm looking at decision points. I'm looking to take advantage of large swings, up and down, up and down, up and down.
Okay. I just, the reason I asked is I showed DB some, I actually did some development on a depth history tool, which I did show some screenshots to DB. I worked on that last year, but there's obviously a lot of other products out there, Bookmap being an Auction Vista. Ninja have provided somewhat of a version. But what's interesting is in developing it, in feeling that you really want to get into that micro structure of the market to get in faster. And as we know, liquidity can be pulled.
Yep.
In actually developing that, and I've got it in the sideline on hold as to whether we bring it in or not, given there's so many products out there. But one of the things I feel with the imbalance and the circles, the two types of circles that have been added and provided here, is that you're getting real market-generated information to act upon.
Yeah.
And actually, I've kind of started looking less at the depth tool. Even though it gives levels, those levels can fool you and be pulled away.
Right. Right. And it's, a lot of this, when I look at the circles that you have here, I'm not just looking at the circles, I'm looking at what happened after those circles.
Yes.
Right. What did the market try to do and what didn't it do? And yeah, I might have gotten caught in something. I might have gotten stopped on something. But if I look at what happened after those circles, I start to get another story that gives me opportunities to get back in. And if I start out with a loss or two, and this is where traders get killed. You start out with a loss, you start out with 2 losses, and now you're super tentative. Your psychology is screwed. I mean, you're toast. But by continuing to read what happened, okay, now this has changed, this has changed, this is the same. It gives you opportunities to get back into the market and take good risk-reward trades.
Well,
yes,
Mark,
I agree. Yeah.
I think to the point we were talking about earlier, so if I've got somebody who's having difficulty reading the structure of the market, and you can see all the activity that's happened here with the imbalanced circles.
Yep.
Okay, clearly this was a battleground. Whether you can understand the structure behind that and the reason or not, it's immediately your eyes are drawn there. And we know that this area was obviously a battleground for some structure. Here is where we revisit it. We come through. We see it on the other side. I know you. There's no way you wouldn't have taken the CWAP trade here. You get on the other side of the structure of it.
Yeah.
There's no question about it. This is exactly where you're looking for your trades to come in.
Yeah. And the other thing that I'm doing now is I am looking at that developing profile relative to price movement and how I'm not looking at the bids and the offers coming in. I'm looking at how that profile is actually developing in a swing, and that is giving me a lot of information on whether or not the move is going to continue, or I might be at risk. I might want to take some off and lock in some profit and see what happens. Because my thought is, if this is going to keep going up, I can always get back in, but I'm taking some profit. So depending on how that profile develops, and even where you have the profile right there, I mean, I can see price has gone up, but that profile is clear to me that price has not stopped seeking higher, trying to find higher price.
Oh, absolutely.
Yeah. Yeah. I mean, this is.
I cannot imagine that you're not all over this, getting on the other side of all of the activity. So
I love this. This is basically how I use the trade these days in this market.
One of the things that you shared there was what is the follow through or the reaction to the imbalance areas. I did touch upon that in some of the initial user documentation, was this idea of effort versus result.
Yep.
It's something that I lean on, is that in some cases it will blow right through. In other cases it reverses. So it's always that follow through.
Yeah. And if it blows through, my instinct, immediate instinct is I'm going to wait for a retest. I'm going to wait for a retest, and I'm going.
Yes.
And if the retest never comes, and there are times when the market has just slid further up or slid further down, and I never got the retest, so what? And I can sit there and watch. I can watch a 10, 12-point run and never have an opportunity to get into that trade. But I know that there's going to be another one. Maybe not today, but maybe tomorrow or maybe the next day. And so I can just wait. And because this trade that you're showing right there, I mean, my goodness, that's a layup. That's a gimme.
Particularly in the ES. I mean,
particularly in the ES. I mean, I showed somebody this not more than 2 weeks ago, and their response was, "Why wouldn't everybody be doing this?" And I said, "Exactly."
Well, listen, guys, I have to run, but I sincerely appreciate the little powwow here of getting some minds together and talking through this. I think it's helped me tremendously. AJ and I have been working through so much stuff for the last year trying to get NT8 up and going, and so a lot of you sort of get lost in the details.
Oh, my word.
And sometimes it's good to just bounce it off each other and see where everybody's thinking on what they're seeing.
And sometimes, simple is good. Mm-hmm. Simple is good, especially with the traders that we have out there today. So I'm actually considering putting something together for you, DB, to put out there for people to look at using VWAP, CWAP to trade with. And I don't know.
Everybody's dying for you to do another course. They are. So.
Well, yeah, I don't know about a course, but I think I have an idea on how to put some things together for people to show how to effectively use CWAP, VWAP, and really don't touch all of the settings within OFA. Just use some of the basic tools to be successful.
Well, that's how I like it.
Yeah.
You know that.
I know.
I'm always trying to use less. So.
Yeah. As soon as I get this stinking computer back up and running, I'll start doing some video.
Fantastic. Well, I know everybody will enjoy it.
Yeah.
Well, guys, thanks again. I do appreciate it. I'll edit through some of this.
Thanks, AJ.
It was a very long call, but
yeah, thank you, Mark. Thanks for your time.
Yeah, this is great stuff. Good job.
Okay, guys.
Okay, take care.
Take care. Thanks so much.
Okay.
Thank you.
Bye-bye.
Bye-bye.